my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of the Chicago soybean complex. I'll start with Chicago soybeans themselves. Beans in the teens, but still only just. Said 3 weeks ago here, I'd at the time noticed two new possible patterns, not necessarily complementary to each other. First is a mid-June to date possible ascending triangle. The flat topside trend line was capped by the resistance at 1459, whilst the now broken rising mid-June to date uptrend, currently at 1355, is the lower trend line. I even speculated that the rising long moving average, currently 1363, could be a dynamic contender for the rising uptrend, or at least an influence. And then the flatlining, more or less medium moving average, currently at 1434, could be a dynamic contender for the flat topside trend line, or again as an influencer. This was all well and good until early last week. The market broke down through both the long moving average and the lower trend line as well, and with multiple closes underneath. However, that's not the whole story. Now, you would think, okay, ascending triangles, they can break either way. However, they tend to break upwards something like 6 to 7 times out of 10. And that's where I'd like you to hold that thought for the moment whilst I detail the other possible pattern I talked about. The second possible pattern is also related to recent events, but instead it's from early June to date. This time we take the core action that forms the ascending triangle and include it as part of a possible bearish halfway hesitation, along with the action from early to mid-June, making the left flagpole. Now, the market hadn't started forming the right flagpole, but I should point out, as I did at the time, this is an overtly bearish pattern as opposed to the earlier one. Indeed, you could actually extend the left flagpole out to the high of the market back in May, but I personally think that would be stretching it a bit. Okay, so there you have the two patterns. Well, what has happened since? Well, as I mentioned, prices broke down through the lower trend line last week, and I was waiting to either see it as a false break lower or a true break lower. Guess what? I am still waiting. Market does this sometimes, but the break lower has stalled. It has not headed lower, instead it has started to run along the underside of the broken lower long moving average and the broken lower trend line. This puts us in a situation where I can either call it as a true break lower nor a false break lower. What's more, this indecision is evident in the market. Just take a look at the large number of indecisive spinning tops and doji crosses that we've seen in the market over the last 2 weeks, and you can see what I mean. And that is where we are now, indecisive. However, there's a new factor entering the market. Today we may be on for a key reversal. If we close tonight either over 1348.5 or under 1347, then we'd be on. Anything else makes it a lesser outside day. Right now we're looking at a key reversal up today, so you can throw that into the mix as well. Chicago soybean meal. I wrote some 7 weeks ago, and I quote, "The month of May was a monthly key reversal down. It's important to remember that." End of quote. Then during June the market broke down through the long moving average, as a result probably, currently 399.80, and dropped down to the lower time, currently 317.5, of the bearish 2021 Andrews pitchfork before bouncing back up, so that today, by just going sideways effectively, since mid-June, July, we've ended up reaching up to test the middle time, currently 363.80. It is at this time I wish to recognise the wonderful job of the bearish Andrews pitchfork has done in channeling the market lower. It was drawn in May and has been useful and valid up until this very day, and perhaps for some time forward. That is key to the market here, the bearish Andrews pitchfork. When it gets busted or adjusted to a bearish shift pitchfork or some other pattern, then we can look for new ideas, but until then that rules the incentive in this market. Now, that being said, one action that may happen is today. We are currently on for a key reversal with today's wide range. So if we close tonight either above 357.5 or under 353.80, then we'd be on. Anything else, then would have a lesser outside day. This is one to watch out for, because at the moment we are looking at an outside day. It'll be very interesting where we close tonight. Chicago soybean meal. The rather lopsided diamond pattern, highlighted over a number of weeks now, is still the key pattern here, but it has some competition now. A few words on this pattern first. The diamond patterns can be tops, bottoms or continuations. In this particular case it will be either a top or a continuation. 3 weeks ago the market broke down through the lower trend line, but did not immediately follow through lower. Instead the market chose to run along the underside of the broken trend line. This actually stopped when the market reached the right hand side apex of the diamond. That's 2 Fridays ago, thus adding weight to the pattern being a genuine action. Anyway, prices dropped last week and at the start of this week, but they came across an obstacle. Actually, 2 obstacles. They were the unreconstructed November 2020 to-date uptrend, currently at 61.22, and its partner since June, the rising medium moving average, currently 60.90. These two stopped cold, a strong and significant bearish engulfing pattern made this past Monday, and turned Tuesday into an immediate countering bullish thrusting pattern. Since then, forces have been clashing, the bearishness from the diamond and the bullishness from the uptrend and the medium moving average. This is seemingly reaching another phase with a possible key reversal up today. If we close over 62.25 or under 61.18 tonight, then we'd be on. Anything in between would have a lesser outside day today. However, there's one issue that has also entered the frame, and that's today. The flatlining short medium moving average, currently at 63.28, is capping the market right now, aided by the declining short moving average, currently 63.41. This is a new factor in a market that is already factored up with bullish and bearish influences. And as of right now, we are looking just barely as a possible key reversal up for today, but just by 2 ticks at the moment. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Service International Limited. And here comes the final bit.